So today we are going to see auto sector in depth, and I will show you how to do DCF valuation also. It's quite a important thing, and there are different ways of doing valuation. So let us see the auto sector. I hope you all are able to hear me and see the screen. Just confirm, one of you.
Yes.
Okay. Mr. Nautam Shah, hello. Okay, let's start. So we are seeing the auto sector today. So disclaimer, this is a stock market information for educational purpose only. We are not SEBI registered advisor. Please consult your financial advisor before taking any decisions on buying and selling of any stocks. We are not liable for any gains or losses made by you. The objective of this course is to spread financial literacy. Now, let us see the market from the point of view of the auto. The auto, as on this week, it increased by 1.96%. On a monthly basis, it has increased by 10.31%. On a quarterly basis, 15.57%, 55%. Half yearly, 6.17%. And on a year change, it is around 18.57%. This is as on 15th of July. I'm using the trend line. So you can see here, this is the auto. So the auto index has moved up. The PE of the auto index has started moving up. The PE is at 57 levels here, 57 levels. The EPS in the auto has moved up. Okay, you can see from around mid of May, June, it has moved up, and it is moving up strongly at 215 levels. The price to book value is moving up. That means the auto stocks are becoming expensive. PE has also moved up to 52. Once again, indicating both PE and PB are telling me that auto stocks are becoming expensive. Now, how to do valuations? Price to earnings per share and price to book value is one of the ways of looking at the valuation. You can look at individually with the past history of the stock, as well as you can look at the indicator in the sense of the PE of the industry. So the industry PE is at a particular level, then you can have a look at the stock. Now, these are the auto stocks which are so it will consist of your Nifty auto, MRF doing positive, Bosch going up. This is a auto ancillary stock. MRF is also auto ancillary. Maruti is the original OEM company manufacturing cars. Bajaj Auto, two-wheelers. Eicher Motors, trucks, and Royal Enfield, which is one of the prominent brand. Hero Motocorp, Balkrishna Industries, basically in tires, Tube Investments, cycles, and now coming up with EVs. Escorts, tractors, Mahindra and Mahindra, passenger vehicles, car, as well as commercial vehicles, even tractors. TVS Motor, mostly on two-wheelers. Bharat Forge, not doing well. You can see this. Sona BLW, not doing well. It's still down. Tata Motors moved up. Still, the fundamentals of this company are not so good. If you want to buy, it is at a risk. It is at a risk. But the company is turning around, and the EV markets, they are having 85 to 90% share. So you will see that also. Ashok Leyland, quite up. So if you see the stocks which are doing really well are Mahindras and Mahindras, Ashok Leyland, Maruti, Hero Honda, Bajaj Auto is also not so up. It is moved up, but it is continuously moving in a particular level. Okay. Now we will see the other tool which I am using today for the first time with you all is one, which is I have a subscriber for Tijori Finance. Okay. And I'm using this to see the auto sector. Here it is. This is my automobile sector. A very good tool, Tijori Finance, has a lot of information which is not available on others, like the macros information in each sector, raw materials consumption, what is the exports, what are the market share. Now this information is not available in any other tool, so which you can see now. Now you can see here, the auto sector is comprising of the bearings, which is having 1 minute. So as on 14th of July, TJI, meaning the Tijori Finance, they have their own index. So bearings is doing the best. Then we have the auto ancillary, then the tire companies, and then the OEMs, which is the basic companies. Now, if you talk of ancillaries, which are the companies I'm looking at? I'm looking at these companies. These are all the good companies one should look at in ancillary. There are many of them, but this is Minda Industries, Balkrishna Industries, Endurance Tax, okay, Motherson Sumi, Bosch, ZF Commercial Vehicles, Apollo Tires, Bharat Forge, Sona. Now, if you are looking at the OEM, these are the end users, car manufacturing companies which are listed. Okay, Tata Motors, Ashok Leyland, Hero Motocorp, Bajaj Auto, Maruti, TVS, Mahindra and Mahindra, Eicher Motors. Then we are looking at the bearing companies. SNL, Timken, Menon, NRB, SKF. This is the major part. SKF is the major market share. Tire companies, you can see this. And in this, Seat is doing excellently well. And the next one is Balkrishna Industries. Seat currently is doing very well. So this is the basically the index of the autos. So you can see the different colors are shown. The bearings, auto ancillary, tires, and auto car manufacturers. In that order it is. Let us see further the two-wheeler markets. This is my two-wheeler chart as of 30th of June. You can see the rankings. Then I'm looking at the passenger vehicles. Hyundai, Tata Motors, Mahindra and Mahindra, Toyota. Now many of these are not listed. Honda, Ford, Volkswagen. Unfortunately, I don't have the data in this for Maruti. So you can see Maruti missing, but it is there, but the data is not there. That is why it is not showing here. Three-wheelers, Tiago, Bajaj Auto, Mahindra, Atul Auto, TVS. Tractors, the Kubota is nothing but Escorts. Okay. Commercial vehicles, Tata Motors way ahead. Now, let us see the one particular company. I want to start with Maruti, and let us see the performance of Maruti. Here is Maruti. I'm using Screener. Now, why I'm using different tools is because every information is not available on all tools. Now, if you see Maruti, now how we are going to do the study? These are the parameters I am studying. These are the parameters I study. So you should have a worksheet. On the vertical columns, you put your parameters, market cap, current price, high, low, stock P, book value, and all these parameters will be there. And on the row wise, you put your car company. So here I'm looking at Maruti Suzuki, and look at the stock P. The intrinsic value is around 2069 and the stock P is 68.4. Stock P about 30 is supposed to be high, but in the current scenario, it is way high. If you see 2000 and 8,778, and if you talk about the analysis of the markets, pundits, they are telling that Maruti will go to 9,200 levels. Where is, okay. Here is Maruti. 9,182 level is the forecast. Now, the difference between 870 and 9182 is around 400 points. Now, in this kind of market, 400 point is not even 1%, half a percent. So when you are looking at not one, it is around same about less than that. Okay, so about 400-500 points ka difference ke liye you are putting an investment, and if supposing that investment goes down, then so you have to be very, very careful when you are selecting very high priced PE shares. You can see the PE of Maruti is very high. Earnings per share is relatively, it has come down, but it is now touching that same levels it was earlier at around 92. The PB, price to book value, okay, it has come down to this. Okay, you can see here 4.67. Anything about 2 or 3 is supposed to be a costly share. So going back to Maruti in Tijori Finance, okay, let us see the quick view of this. The price is 8778. The chart is showing me these things. Now I'm going to compare Maruti with Tata Motors, and I'm going to compare with Mahindra's. So here is my Maruti with Tata Motors. So currently Tata Motors is showing a better performance in the last period. Then I'm adding the Mahindra's. Here M&M I have added. So you can see here, Mahindra's have moved up. They have overtaken Tata somewhere around 21st of June, and they are moving up. And if I add the OEM, the yellow indicator, so Tata Motors and Mahindra's are doing much better compared to Maruti. So that is one deduction we can see. Share price has grown over last 10 years. ROE and RO, the net profit margins, they are positive, but they are not so great. I can show you that. You can see here. Here it is. Sales growth in the last 10 years is 9% CAGR compounded. In the last 12 months, it has increased to 26%. Previous 3 years, it was just 1%. Previous 5 years, it was just 5%. Similarly, profit in last 3 years was negative. Last 5 years was also negative. And in 10 years period, it was 10. This year, it is made positive. Stock CAGR, currently it is positive by 20%. Return on equity is just 7%. So when you're seeing this kind of performance, and then I'm going to buy at a very high price. You can see the 4.79 book value is very high. Sales is not moved. If you want to see the sales, see here, sales is not moved at all. See the percentage. 19, 20, 21, 22. Last 2 years it was negative. This year it is positive. Okay. Operating profit margins less than 10%. Earlier it used to be at 15, 16%, 14%, 13%. It has come down. Now from 2020, it went down. Then I will show you a case study of valuation. First, I will show you how to do relative valuation. So here I'm seeing relative valuation of Maruti, M&M, and Hindustan Motors. See here, the P is very high. Mahindra P is 23, which is reasonably good, very reasonable. Okay. The stock price is 8778 Maruti compared to Mahindra 112, 1172. The industry P is at 49.48. Okay. Let us see Tijori Finance. The stock has grown in last 1 year by this much. Okay, by 2 years, 4 years negative, 5 years little positive. So this is the CAGR, share price. TTM, last trailing 12 months sales, you can see here. Margins negative, P looking positive. Earlier it used to be around 11, 16, and now it is around 31, 35. In last 1 year, it is. Cash flow from operations positive, good. So the stock is good to hold. On dips, if you want, you can accumulate. But if you want to buy at this high price, there is a risk element which is there. Okay. So let us see how do I do my cash flow, which is called as we are looking something called as a discounted cash flow. I'm giving you the first example. This is of Maruti. So initial free cash flow of Maruti, how much it is? So let us go and click on financials. From there, I'll go to cash flow and I'll get a free cash flow estimate of. Now Maruti is showing a negative in the last 1 year. If I take the sum of the three, average I take it. So 6 is nothing. 6511 and 1278, around 5,300 levels can be considered as my average cash flow. Divide by 2. So 2. So I'm taking this 5,500 as my last 2 years sort of, or you can take a little low, around 4,000, because current year it is negative. Discounted rate is my rate. Now supposing at today's level, I am investing some money and after 3 years, I'm expecting a compounding of 10 to 12%. So in the future, I'm expecting compounding. But if I take the future and I go back to today, then we call it as discounting. So if I'm taking a future of say 12, 14%, then I'm saying I'm discounting that growth at today's rate at around 15%. Now, normally current market conditions, we are looking for a growth of around 10, 14, 15%. If it is less than 14, 15%, then it is not of much use. Then growth rate in the first 1 to 5 years, I'm looking for a moderate 10%. In the next 5 years, after 6 to 10 years, I'm looking for a 5% growth. Normally, this is the trend in which it happens. And the terminal 5 years, I'm looking for say 4% or 5% growth. Now, what is the market cap of Maruti? 265,197. You can see here the figure. The market cap 265, 167. So we can put it once. Slight variations you will find some places out there. 265, 167. Okay, what is the price of the share? 7,800 levels, or how much it is? 8778 levels, sorry, 8778 levels. 8778. What is the depth of Maruti? Current depth? 423 levels. So let's put 423 levels. Now this particular worksheet calculator is available in Google. What you have to do is just in Google mention DLF calculator, DCF calculator, and pick up this Phenology DCF calculator. This is the same one which I have opened here. Same one. Now, so my initial free cash flow is around 4,000 crores, not very high this year because it was negative. Discounted cash flow. I am clicking on this and I am finding my discounted cash flow as 1,600. Fair value. Now what is telling me? My market is telling me that even if I consider the positive 5,500 and I go for this discounted cash flow, the price of the share should be around 2,200, 300 levels. And if you see the intrinsic value, this is based on some other calculation. It is telling me it is around 2,000 levels. Whereas the stock PE is actually very, very high. It is around 8,000 levels, 4 times more than its intrinsic value. So there is no chance of any margin of safety. If it falls down, it can fall down very badly. So what is the reason I should buy? My margin of safety is hardly anything. The stock is already overpriced. Should I buy? It's a question mark. Now let us take another case of Mahindra's. And we'll see whether Mahindra and Mahindra is worth buying. Mahindra and Mahindra. Here is Mahindra's screener. The PE is at 23, much less than that. ROC, little less. It should have been around 14, 15. It is less. ROE is okay, around 15 is good. Price to book value, little costly. The intrinsic value of the share is 630 and the current price is 1172. So the stock is costly, nearly double, but still the PE is telling me it is reasonable. Around 25 to 30 is. Industry average is how much? Industry average is, industry PE is 49 and here you can see it is 23. If I want to see my PE levels on the charts over here, you can see the PE has come to the median levels. You can see this median is 23 and currently it is at the median levels. So book value point of view, it is little costly. Here is my M&M, peer values comparison. 23, Maruti is 68, industry PE is around 49, intrinsic value 630 M&M. Now let us see the DCF of M&M. So I need the first cash flow. So let us calculate the cash flow of. What is the free cash flow? It is the operations cash flow minus the capex. So you see here M, Mahindra and Mahindra. Here is Mahindra and Mahindra. Commercial vehicle, it has a market share of 23%. Light commercial vehicles, 41%. pick up small vans and all. 56%, passenger vehicles 7%. So this is the chart which is shown the breakup of the revenue. So let us see the financials. Current stock has moved up in last around a month's time or 1.5, 2 months time. It has moved from 900 levels to this level. The last 10 years earning, it has started moving up, showing a growth. You can see here, ROE, ROCE slightly less. Latest is improved. Last 3 years was less. Profit is improving. Okay, let us see the cash flow levels. The free cash flow of Mahindra is 3,908. So let us put the value 3,908. Discounted cash, I'm considering a 3 months kind of growth of 15%. I'm putting this as moderately. The company will keep on moving by 10%. If I want, I can make it 15 and 10, but I'm keeping 10 and 5. Terminal rate, I'm decreasing to 3%. What is the market cap of Mahindra's? Let us see the market cap of Mahindra. 145,764. 145,764. The current share price is 1772. 1172, sorry. 1172. The debt of Mahindra's is how much? That's quite a big debt. Okay, you can see here debt to equity is above 1.65. Normally above 1.2 or so is okay. More than that is little risky. So the debt levels are high, 77605. That's a negative point here. The margin of safety, I'm making it 10% because I want to keep myself safe in this kind of where the debt is high. And I'm calculating my DCF. The calculator tells me that the DCF value, the stock, because of the high debt, is actually supposed to be negative. Okay. Supposing I reduce my debt to 1,000 levels and then do my calculation. So when reducing the debt, then you will be seeing that the right price of the share should be around 300. So this is the debt. Now, if you see, the free cash flow is 3,900 and the debt level is 70,000. Okay. So if you are a pure fundamentalist, you will say that little problem is there. Okay. Because of the high debt of this company. So let us see the balance sheet of this company. Let us see the borrowings. Long-term borrowings. Here is at 77,000. Short-term was 5,000. So if you see, continuously this company, the borrowing is increasing. You can see here. 2000, earlier it used to be 12,000, 16,000, 19,000, 25, 22, 23. So the borrowings are increasing. But still, the market perception is that this company will do well. See the cash flow from operations, 9,248. And once again, it is doing investment. It is investing something like 6,040 in a capex. So this investment is continuously happening. So as it is borrowing, it is continuously investing and expanding its capex. You can see this year also they have increased from 5,989 to 6,000. Last, if you see last, say 5 years, 5,000, 6,000, 7,000, 6,000, 7,000, 6,000, 6,000. Continuous capex is happening. So the company is in expansion spree. So if we take that as one of the reasons, then it will not be a proper thing because company is actually expanding, and that is also one of the reasons the cash flow is little low. Some of the ratios for valuations are here. P, you can see this is my last column is the important one. Last three columns I can see. The valuations are pretty reasonable. Price to book value is also reasonable. Enterprise value to EBITDA is around 10. That is also good. So if you see relative valuation is good, DCF is telling me because of the high debt. Okay. But if I reduce the debt, then I can see that the company is not in a position, not so bad. Okay. So if the debt is reduced, then this will make a change. So currently at this level, the DCF is not in a position to give me the right valuation of the stock. Now I want to tell you one thing on DCF. It gives me a relative idea of the company's position. Okay. So DCF alone is not good enough. What you need to do is you have to check with the industry, check with the 5 years position, and then you come to the conclusion and look at the industry, how the industry is doing, how the peers are doing. So that is also another important fact. Some other companies which are I have listed out is Tata Motors. Let us see Tata Motors, how the company is behaving. You'll find the balance sheet and the profit on PLL is not so good. Okay, the PE is negative because actually it was making losses. It has turned around, but earlier it was making losses, and that is why you can see the PE is not given. The intrinsic value cannot be calculated. The PE ka basis pe PEG ratio cannot be calculated. Okay, so there is a negative point over here, and that is why you can see the PE is not being shown in the last 2-3 years because they are negative because the earnings itself is negative. But this is a story of a turnaround company, and that is why Tata Motors at lower levels is good to buy, because I had bought it around 200 levels, but that was a year back, 1.5 years back maybe now. So you can see Tata Motors is a turnaround company. What we saw in the market share also, it was moving 43%. In the EV business, it is around 85-90% market share. So the company is doing relatively well. Positives are not there, negatives are too many. Even the ICR, interest coverage ratio, is quite high. You can see it is not able to pay money. Means high meaning in the sense it is in the negative point of view. The patriotic score is less than 6. Maximum score is 9. Up to 6-7 is okay. Free cash flow is there. Currently, it is there, of around 78.4%. So here it is. Slightly net cash flow is there. So earlier in 2020, it was negative. Now it is able to manage. What is the debt of this company? The debt of this company is quite high. You can see that, very, very high. So DCF will not happen here because the debt is very high. It will happen, but it will not show the proper figure. Let us take another company, which is Bajaj Auto. Bajaj Auto market cap is this, price is 3913, stock PE is at 20, intrinsic value. Here intrinsic value is 4242. What does it tell me? That I have got a margin of safety of about 300 rupees. What does it mean? That I can play with this stock because I know that it can go up to 4242 levels. So let us see the peers. Bajaj Auto, Atul Auto. Okay, they are not showing other companies. We'll see in trend line. Here you can see current price is here. Last 12 months PE is here. So if I compare with Eicher Motors, it is much better. With Hero MotoCorp also it is much better looking. Scooters India also it is better. With Atul is negative, okay, because the earnings were negative. Now let us see the DCF of this particular company. What is the initial free cash flow? So the free cash flow, if you want, you can take the average of the last three, or if you want, you can take this last. I'm taking this 3690 to make the calculation relatively easy. 3690 is the, I'm doing for Bajaj Auto. Discounted rate, I'm keeping it 50, moderate rate 10, growth is 10 in the next 5 years, and lower growth rate later on. Terminal ratio will be around 2% or 3%. Market cap of Bajaj Auto. So market cap of Bajaj Auto is 113,239. 113,239. The current share price is 3913. And I want to keep a margin of safety of around 10%. So let us calculate that. And the actual DCF point of view, it is telling me the stock should have been around 1424 price, whereas currently it is at 3913. Even if I assume that, supposing my growth is 15%, and here I'm saying this is 10%. Let us see how the change is happening. Now it is telling me the stock price can be around 1900 level. So at this high growth rate also, and if I say my discount rate is 20%, once again I do what if basis, I check my discount rate. So what I'm finding, it is coming nowhere near my, if I want to say 15% or 12%, I'm reducing it, and I'm doing once again. The DCF tells me that the price should be maximum around this. If I'm reducing my margin of safety by 5%, then also the price should be around 2,700. Here the value has changed, the margin of safety. MOS meaning margin of safety. So what we are seeing is the stock is already high price, currently at 3,900 by this method of DCF calculation. When I'm looking at my intrinsic value calculation basis of screener, it is coming to 4242. Okay. The current price to free cash flow, it is 33 times the free cash flow, means it is costly. Okay. Price to book value is also telling me it is costly. PE is telling me it is relatively cheap. So you will have now PEG ratio. Price to earnings per share is 20, but earnings growth point of view, price to earnings growth is 3.55. Now this is the alarming fact. This tells me that, okay, what was the depth in this? Depth, I forgot to change the depth. Let me change the depth. Depth of Bajaj is 123. That was my mistake. Okay. I just make it 123. And now let us see. Okay. It is telling me that it should be around 2,732, whereas currently it is 3,913. Means it is little expensive, around 1,000 rupees more than the actual value of the stock. Now, if you see earlier, the PE of the chart, it came down to this level. The stock also came down to this level. around 3179 in December. So it came down and then it has moved up. Here it was around. So what I'm trying to tell you is that you have to do these valuations. Evaluation gives me a rough idea how costly or how cheap the stock is. It cannot give me 100% idea. It is no 100% sure ke yahi hoga. Okay, because when we change the parameters, it is at our convenience. Now I feel that the Bajaj Auto at the end of 10 years, 20 years will be moving from 15 to 10, and in a longer period of time, it will come to 2% rate, terminal rate. So this is a very important thing which you should understand, that when you are evaluating the stock markets, the individual stocks, you have to consider the PA from the industry point of view, the P from the historical point of view, the PB values, and all these are very important things. There are some other tools also which gives you some ready-made kind of, like Market Smith. You can buy these tools and then you can do the evaluation. It gives you a score also. You can put your custom also. My custom score is 56 for Bajaj Auto. So what is it telling me? It tells me that the price of the stock is relatively okay, but the stock, see the PB 3.79, the earnings per share, PE ratio around this, 5-year ratio is between 16 to 26. Currently it is around 18-20. So you have to go through this, or you may buy some of these tools, or this is my custom ratio, around 55-60, I go for that stock. So it is okay. The price is okay. So you can have a look of any of these tools, Screener or Trendline or Tijori Finance. All these are good tools. You will not get everything from any particular tool. You will have to look at multiple tools for multiple information, what you're looking at. Bajaj Auto is here. You can see Bajaj Auto, the earnings, PE levels, market cap levels, profits, and the competitors are below. You can have a look at them. The growth levels. I'll just come in a minute. So when you're looking at the various tools, each tool will give you some kind of information which will be useful to you. You can see some of the ratios here. ROE, return on equity, return on assets, return on capital employed, and long-term debt, which is hardly anything. The ratio is 0. Whenever we have ROE or ROCE of anything above 15 or 17, we consider it as a good stock. So Bajaj Auto is good. Aisha little low. This is okay. This is okay. These figures are okay. Whereas here, this Ward Wizard, I'm not aware of this company. Atul Auto is negative. So I will not go for Atul. Okay. If you want to look at some other competitors, you can have a look. Scooter in you can have a look at some of the charts here. I've already kept in what levels you can think of going for the stocks. Here it is. I'm looking at some of the good ones. Minda Industry is a good stock. Here is the chart of Minda Industries. Okay. So it has gone up from 518 levels to 538 levels in last week. So this stock is about 1131 and 200 days EMA. So it's quite a good stock, strong. It is suggesting it is strong one. If you are getting anything at these levels, which will be difficult for it to come. The stock is showing, so I don't think it will come at these levels, but if you're lucky, you're getting at these levels, it is good. Around 480 levels, it is a good buy. Balkrishna Industry is a good stock we saw just now. So on the weekly chart, if you get it around these levels, around 2196, 2200 levels. Mahindra and Mahindra, it is on the rise, continuously on the rise. So look for these levels down. Bajaj Auto, Eicher Motors, somewhere here. TVS Motors, this is also a good stock. A lot of innovation is happening in this stock. और एक हो जाता है सर. So Eicher Motors, we can't see any demand zone level here because it is overlapping. Oh, here you can see, here it is. At this levels you can look for it. Hero Honda, a big jump from here on the weekly charts, three weeks back. So look at these levels. It is already touching this levels just now. So this levels is good enough, 2007-75 levels. Escorts, Kubota now. It's a Hero Honda. This is the level. It is still at the same level. Maruti. This is the level. Tata Motors. So it is continuously in that same range. Okay. So it is not looking very strong. One peak went down, second peak at the same levels, went down, third peak. It is trying to break out from here. So it is still little weak. May fall down to these levels. So if it comes around 415, 417 levels, that is the time when you can think of picking up the stock. So these are the levels at which you can think of picking up. So before you go for any stock, look at the fundamentals, because some of the stocks fundamentals are not so good, including Escorts, which we saw just now. So any particular stock you want me to have a look, or we close for the day?
Adani Total Gas.
Adani Total Gas, okay. On the day chart, this stock was at around 20, at this levels 2322 on about, say, 3 weeks back, 24th June, that side, that time. And it came from this levels 19. So in a matter of a month, still month is not over, it has moved from 1945 to this levels. Now my thinking is like this, I may be wrong also. What is the reason for this? Any major reason why the stock has gone up by 900 points? Now, if you see this, now some of you will tell me that Adani is rising, I can put my money and I will earn money. But just see, if you are looking from fundamentals point of view, stock P is 612. Debt to equity is good. That is a good point. Promoter holding is good. EV to EBITDA 380, extremely high. Free cash flows minus. It is minus, by the way. And if you see here, we compare with the others. GAIL, a good company. Gujarat Gas, Mahanagar Gas. When you compare with them, none of them are even more than 20. And Adani Total Gas is 612. So it is like living dangerously. You can always buy it. And where it is near the 2867 level high. You can make money doing swing. But if you want to think it from your portfolio point of view, if the industry average is 10.31, Adani is 612. Current market price to book value is 127. And the industry PB is how much? 1.75. So it is maximum 2 or 3 ho sakta hai, or Adani ka 127. Means if I were to sell this company, the book value is 22 rupees and 10 paisa, and I'm selling it at 127 rupees, something like that. So it is, if you want, you can always do swing trading, but from the point of view of anything like a core or positional trade, it is dangerous. It has actually broken this particular level of 2679, and it has come back to this level of 28 levels earlier. So यहाँ से वो break करके same level पे है, but how much is the stock worth it? I cannot tell you. The price is telling me it is doing exceptionally well, but if you look at the fundamentals, it tells me I would not touch this stock, even though it can be giving me some money in the short term, but it can go down also very severely. It can go down to these levels, or it can go down to somewhere near 40. Because in last 7, 6, 5 months, what has actually happened? that the stock has moved from somewhere near 1500 levels to 2800 levels. I don't know. That is your guess as many as. Okay. Any other stock?
Sir, Wilmer.
Adani Wilmer.
Yes, sir.
That is little respectable movements. The reason why I'm saying is it came down with the market when the I removed the wrong parameter. Now Adani Wilmer. Acha, Adani total gas, I want to show you one more thing. The price is the factor. So you can see Adani Wilmer. You can see here. The stock is moved up. This is the relative strength with respect to Nifty. And now the stock is coming down. So when the crude oil prices went up, this was the level at which it was moving on. But afterwards, it has come down to this level. The stock is just touching the 11 and 31 days EMA. It does not have the 200 because it is a new stock comparatively. In the weekly chart also. So if you are doing any trading over here, this is the range, and I don't see any level except I can put a horizontal line and tell you that this is the level at which it can come down, 552 levels. Because यहाँ से वो ऊपर गया था, फिर वापस यहाँ वापस गया, वापस ये लेवल पे, वापस ऊपर जाए, वापस नीचे आ रहा है. From the point of view of my fundamentals, stock PE 100. Once again, the same story. The stock intrinsic value is 153, whereas the current price is 624, nearly 4 times more. 624 high levels is 878. अभी नहीं है, लेकिन वो जाके आया. ROC is 21, ROE is 15, book value is 11. Anything about 3 is high. Industry P is 33, whereas this is 100. Book value PB, how much it is? 11, whereas industry PB is 1.99, near about 2. Equity score is 6. Debt to equity, not much of debt. It is within 1, but this is high. Price, earnings per share, 2, growth of the earnings per share. It should not be more than 1 or 2. It is 3.5. So the stock is little costlier, not little costlier, quite costlier. Okay. If you want to see the PE and all, here it is. See, from here on 29th April, 13.9, it went to this level, 121. What has it done so that it has to move that much higher? I don't know. Your guess is as good as mine. I don't see anything. If you see the cash flows, the net cash flows is 22. It has gone for some expansion. So it has purchased, it is doing some capex, but it is not very high capex. Less than 500, around 520 crores. 500 crores, 600 crores, 900 crores. Operations. So receivables are quite high. Negative one. So the net cash flows are much low. Maybe the company is surviving because it has got a lot of fund flows coming. But on the cash flow basis, it is just about managing to survive. And still the markets have taken it up so much. See the ratios. ROC is good, positive. Working capital days, not very high. Cash conversion cycle, because it is of oil, food oil, basically. But inventory days are high. Money is not so easily received. Money is not so, rather they are not paying this. 67 is days payable, and receivables is debtor days are 15. Shareholder pattern is 87%. Adani itself is holding 43%. FIRs only 2%. Domestic investors are only 0.4%. And public is 9%. Normally, DIs have a better idea of this kind of companies, what is happening at the company level. Their comparative investment is much lesser. Okay. That was in March. In June, it has actually come down. Even FIRs from 2 has come down to 1.5. So, whereas the retail investors have increased their earnings from 9% to investments is 9 to 10.5. So when FIRs and DIs have come out, the retail investors have actually put money inside the stock. Any other stock? I will not go for this company because it is actually relative strength basis, it is coming down. Any other stock?
Avenue Supermart, sir. At the current price. Yeah.
$11.31 EMS, just touching the 200 EMS. This level was a good price, 3.4 something. It just touched the demand zone and it started moving up. This is also one stock which is living dangerously, but it is in good hands, so you can think about it. And they are in the spree of increasing the outlets, and they are actually owning the outlets. The intrinsic value is 770, whereas the current price is 3927. So 6 times or 5.5 times more. Very high. Stock P is 125, once again very high. ROC is 15 and ROE is 11. So relatively it is, ROE point of view, it is not so good. 15 is okay on the borderline. Price to book value, maximum it should have been about 2 or 3, 4. It is 18, it is very high. PB value is 8, industry, here it is nearly double. Industry P is 268, here it is. Relatively, from the stock point of view, the industry P is higher here. So that's a positive thing for the stock. So here it is, Avenue Supermart, Trent, Vedant Fashions. This is the industry P and this is the stock P. Now Trent, why should we buy Trent? Avenue Supermart, still it is okay because I'm comparing with this. And because of Trent, the industry PE has gone up very high. If you see, all others are around, even VMart, very, very high PE. Why should I buy VMart? The intrinsic value is around 308 and the cost of the stock is around 2626. Okay. So look at this, and fundamentally, I don't think I would go for it. But VMart is okay. I'm talking of Trent. I will not go for it because it is very costly. Very, very costly. And let us see the charts. As I told you, at this level, it was good. Even if you get it somewhere in this level. This can be a reasonably good price, 3,500. But current prices, it is going up, no doubt. It has come from a top level, but if you see, there is a complete consolidation over here. So it is at this level where there was a big amount of consolidation. So ये बैंड में से निकलना बहुत जरूरी है before it actually goes and it is just coming towards the band. So if you see some of the volume contraction patterns, ये pattern में अभी आके वो नीचे गिरा है. Please, your volume is on, somebody's. So it has just come in the same band where it was there for quite a good number of around 4-5 months. So it has to break the band. Now, currently, it is not so strong and the market is not so strong that immediately it will start moving up. So if you are looking for a buy at this levels, 3,500 levels, not now. Or if it comes down further to 3,300 levels, that is good. Okay. Not now, because now it is actually highly priced. Any other stock you're looking at? Wipro, I am not very sure about its results coming quarter.
Sir, all the IT stocks are down. So HCL has come to that level. KPIT Cummins is one stock which I would like to see.
Actually, I am positive on IT, but you should understand that we have to wait till the US markets turns around. So you have to wait for 6 months or so, or more than that, 9 months. जब भी inflation थोड़ा कम होगा, IT will start. This is my CNX IT. All have gone down. Okay, whether it is 11 days EMA or 31 days or 20 days, whatever you say, or the 200 days blue one, pink one, sorry, all have come down. The prices are below this EMS. So it has actually touched this demand zone, which was drawn earlier, much earlier. So it has come down to that level. If you see, it has come down to that level. So it is at the dangerous levels, but I believe it is bottomed out, and you can little risk here. But this companies, like if you take all the top IT companies, Nifty IT, if you want to be safe, they all will do well. Okay, but you have to hold for 6 months, 9 months. And this period is also like that only. If you're looking at, there is Mindtree. It's at the same level, you can see, same level which was earlier, around 7-8 months back, last August, not 11 months back. See here, same kind of, same levels when it was around 11 months back, June 21, like that. So the IT is moving exactly a year back, okay, from the current levels, and Mindtree is at that level. Tanla is at that level. See Tanla, same kind of thing. It has moved down to the 1 year back levels. Still little more to come back. नीचे आने के लिए थोड़ा और भी है position. Tanla can still come down. LTI. Last year, July, it was at the same level, you can see. Same level, LTTS. So practically all stocks are at the last year's levels. TCS. In fact, TCS has not moved that badly. It has gone down by 20%. This is the high of TCS. Okay. But if you see the last year's level, it has gone below that level. Infi, see at the same level, it is there continuously. So this is my last year's levels. Still time for it to come down. It has not got crossed below the 200 levels. Tech Mahindra's 133% fall. HCL Tech coming near the 200 levels. You can see 1 year back, it was at this level. Wipro, now stock which you want. One year back, it was at this levels. It went up and it has come down. Nearly about the 350 levels, it can go down further. APIT. So it is still up. Okay. This stock is still strong compared to the 1 year earnings. It was somewhere here at 235. So it will not fall that much. It has a support at these levels. So it is taking support here. Whereas in case of Wipro, it can come down to these levels. From 430, what is it, 403 to 350 levels. Because I see a support zone here only. The level pe wo is already touching that level in 393 levels. Okay, any other stock? Happiest
Greaves Cotton.
Greaves Cotton. $200 EMA, it has just touched and now it has gone a little bit up. The stock has fallen badly from 240 levels to 156 levels. Actually, I see a demand zone here, but it is already touching that demand zone. It is just touched that demand zone and it has slightly gone up. So it is near about the demand zone. And if you see this horizontal line, it is round about this levels where it can come down. So it can come down to this levels, 120 levels. Any other stock? अच्छा, one presentation में मैंने जो बनाया वो मैं दिखाना ही भूल गया आपको. Okay. What were the headwinds faced by the auto sector? COVID was there. BSE 6 norms was introduced in April 20. Then corporate average fuel economy, that was nothing but lowering the consumption to reduce the CO2 levels. Emission control norms were increased. That increased the cost and the selling pressure, and many companies started selling at discounts. Fierce competition was there among the auto players. Demand was not there since last 5 years. Semiconductor chips shortage started since mid of 20 and 21. Supply chain logistics problem. These were all the problems which the auto company were facing earlier. And now somehow most of them have come out of it. Now the new things which are happening, there is a disruption. EV vehicles and CNG hybrid vehicles are the most prominent ones which are happening just now in the market. So you have to look for those kind of companies which are having a say in the market in these two particular segments. The EV sales is only something like not a big amount. Okay, not a very big amount. The four-wheelers is not very big, but it is increasing. You can see the two-wheelers have increased from 25,000 to 2.3 lakhs fiscal year 22, from three-wheelers from 1.19 to 1.78. Passenger vehicles 1632 to 16,000. Goods vehicles 517 to 1017. Almost all major passenger vehicles and commercial vehicles are coming out with hybrid models. Ethanol blending is started in a big way. Semiconductor chips issues is getting resolved. move towards SUV model. Now, this is a problem which can happen, not today, but say 2 years down the line, you will find there are excess capacities of production. And China plus one factor is another thing which is helping that model. Many companies now started moving and started manufacturing the parts for the auto and companies. Okay, and import substitution is happening in a big way. Stock specific approach is required. Look at your fundamentals. Look at the company strategies. Don't buy in big numbers. Valuations are already high. Valuations are already high. Selectively, you'll have to buy. Don't be carried away by what the people are saying on the televisions. Maruti is already high. Okay, Eicher Motors is high. Hero Motocorp, Bajaj Auto, little low, buyable. Tata Motors, low, but fundamentally they are not strong. I'm keeping it very clear. Mahindras and Mahindras, high depth, but they are doing into a lot of capex expenditure is going on. And fundamentally, they are good currently. And price has increased in the last 1.5 months from 950 levels to something like 1100, 1200 levels. So this is what I want to close now. Any other stock you want me to let? Because I forgot to show you this headwinds and all. So this is what I wanted to show you. Yeah, tell me.
Zuari Agro. Zuari Agro.
Okay, just I'll close this. I'm not there for 2 weeks because I'm going out of Bombay. So I will not be able to access this. Okay, let us see Zuari Agro. Relative strength, it has just moved up. Okay, but it went up and it came down. So it is moving once again. If you see the day charts, in last few days, it has come down below the 11 and the 31 day EMA. It is just about touching the 200 EMA. You can see this was above the Nifty line and now it has gone below the Nifty. So last 8-10 days, it is below. If you are having it, hold it. Buying, I would not say much because there is a same level. The stock is at the same level since a long time. If you say, but for this particular aggression when it went out, so वो ऊपर जाके वापस वही बॉक्स में आके बैठा है. So it will be difficult for it to move out. There will be resistance at this level. So immediately it will face resistance at this level. If you see, it is in the same range since a long time. And from the fundamentals point of view, the stock is very, very low. Intrinsic value is supposed to be 216 and the current price is 147. The sales growth is good, 49.3%. Let us see the last 5 years and 10 years. Please, only this year the stock has turned around. In the last 10 years, 5 years, 3 years, it is having sales negative. Okay, you can see this. It is a negative sales. So I would not go for this stage. Operating margins on less than 3%, 4%, not even near about 7-8%. Okay, net profit is hardly anything. Current period, it is doing little better. Ratios. Peers. instead of this Zuari Agro, I believe what I had suggested also, Coromandel International you can take, buy. If you are already holding Zuari Agro, I for one would have sold it when it was at this level. But now if you are holding it, look for a move up to 878, 180 levels, 170, 180 levels, and try to liquidate if you want. Because
Sir, I'm not holding it.
You're not holding it, then don't buy it. Don't buy it. Don't buy it. Because it is not showing good kind of performance. Just 1 minute, I'll just
Sir,
see.
how can we find out in screener, how can we find out that increase in the FII shareholding pattern or the DII shareholding pattern?
I'll just tell you, I'll show you.
Yeah.
1 minute, I'll show you. See, the market share is actually going down. I'm just showing you Zuari Agro. Here also it is going down, here it is stable. See here, it is negative. ROC is also less. Current is good, but last 3 years and 5 years. Net profit is negative. Debt to equity is very high, very, very high. So if the company doesn't get good sales, they will go into further trouble. So don't go for Zuari Agro at all. You said about this, no? Let us see here. Shareholding pattern. Here it is. 22 promoters was 65. So promoters is same. It is no change. FIS 0.90, 0.19, 1.05, 1.01. So it has started. Little bit of increase was there. Only one fund is holding it. Okay. DIS you can see here. 5, 5.36, 4.69, 3.85, 3.06, 2.11, 2.11, 1.77, 1.42. Now, DIIs have actually knowledge about the country. So you see only no major mutual fund is there except LIC of India. And government holdings are there. And unfortunately, public is increasing its holding because they are looking at the price. So from 24, 25, 26, it has now moved to 32. So,
so how can we get it in that script when we do the search for the stocks? When we write it down in that
you mentioned
box,
here. See, when you log in, you will come to some.
Yeah.
First thing, you'll have to create a free ID. This I'm on the free. This is I'm not paid anything for this. Then once you go there, what you do is you put your name of the company, Zuari Agro. Once you put the name, now what happens? I have set this for myself. You can go there, edit ratios you can do. And this is the maximum number of things which are allowed. Okay. So I have said this. These are my fundamental ratios which I'm looking. Okay. What you can do, you can take a screenshot of this and look at the same ones and go to edit ratio. Click on this. These are all the ones which you're seeing. If you want something from here, then what you do, you click mark on this, but you'll have to remove something from here above, and that is the maximum, and then do save. Once you save it, you'll be able to see all your ratios which you have asked. So I have taken basically my fundamental ratios, my sales ratios. Sales growth is there, but if I want to look at sales and profit and all this, I go to my profit and loss. Uske niche mere ko ye table milega. So even if you look at one of this, that is screener, where you will be able to get, even trend lines will give you. But somewhere you'll have to pay money, somewhere you don't have to. Here you don't have to pay. See the stock price, it has gone down badly. Return on earnings on equity is just this last year it is good. Otherwise, it has been falling continuously. So let us see the cash flow. I'm very much worried about the cash flow of the company. See here. Operating activity, see the earnings from the business, 919,839, negative 1,293, negative 2635,1521. And now 571 means earnings from the business is not there only. But the business has falling down continuously. We are looking at Zuari. Okay. Any other stock?
Okay.
Now, actually, I have finished my valuation part, the key ratios part also. So, what are the key ratios you can look at? You can see something which I have shown you. Free ratios, market price to free cash flows, industry PB, enterprise value to sales, industry P, enterprise value to EBITDA. This should be around 10. This is less. Okay. Price to book value is good. Stock P is extremely low. Extremely low. It is telling me my business is not doing well. Okay. See the cons. Sales is bad. Low return on equity. Liabilities are high. The contingent liabilities means in the short term, the company has to pay a good amount of money. See here, the liabilities. So total liabilities are this. Borrowings are high. So company is not having a good run currently. So avoid it. Okay. Comparatively, if you want to look at even UPL is good, Coromandel is good, JNFC was good. Just now it is slightly coming down, the price of the stock. Okay. So we close for the day. See you all next time after 2 weeks. I'm not there for that. All the best. Take care. The markets will remain choppy and it can fall down to 15,500 levels, 15,200 levels also. So be a little careful. Don't keep on putting money whenever it falls by 3-4%. Add little bit to your core portfolio. Don't do swing trading. Don't do any trading, by the way.